Welcome to the lecture series 2. This video brought to you about foreign exchange market, covering meaning of foreign exchange market, functions of the foreign exchange market, and different types of foreign exchange market. So let's start now. Foreign exchange, also termed as FOREX Market, refers to the conversion of one country's currency into another country's currency. Like a single country's currency is valued against another's currency or against a basket of currencies of the countries in the world. So, like example, dollar of USA and the rupees of India supposed to exchange in between these two countries may have with the help of foreign exchange market. Foreign exchange market has become an indispensable institution for open economies of the modern world. Of course, with the passage of time, it is gaining strength and undergoing institutional restructuring. But consequently, its capacity to benefit or harm open economies are also increasing. Moreover, the concept of foreign exchange market corresponds to that of the market for a commodity market, like a commodity market or a factor production market. So it is a market in which national currencies are also brought and sold against each other by the individual units, by the firms or entrepreneurs, and the monetary institutions or financial institutions and monetary authorities, which provides an institutional arrangement for international flow of capital funds around the world. It should be noted here that the size or the volume and the structure of the foreign exchange market of a currency of a particular country depends upon different factors. First of all, the share of its home currency or domestic currency in international trade and the capital flow of the world as a whole. Also, it depends upon the extent to which the trade is used in financing international transactions, that is how much volume the country is sharing to the international market. And also currency depends upon the extent to which it is subjected to change, the controlling power of the foreign exchange. So this is all about the meaning or concepts of the foreign exchange market. Now here we are very eager to know the different types of foreign exchange transactions. Basically, in operational purposes, most of the foreign exchange transactions can be differentiated into five main points. Number one, spot transactions activities. Number two, forward transactions and future transactions. And number four, swap transactions. And last one is the option transactions. Now another points in this video we have to learn is that how do the foreign exchange market works or functions. So let us know about the working of the foreign exchange market. So functionally, foreign exchange market is operating in three major points. Number one is the transfer functions. Number two, credit function. And number three, the hedging functions. So what is transfer function? The basic functions of the foreign exchange market is to transfer funds through one currency of a particular country to the another currency of another country. So the basis of transferring the funds to one country to another country, the foreign exchange market is facilitating. Another points or the main functions of foreign exchange market we have seen is that the credit function. The foreign exchange market also provides credit to both national and international and to promote foreign trade globally. And after that, the hedging functions is also taking some of the important role in the working of the foreign exchange market. By hedging, generally we mean covering of a foreign exchange risk arising out of the changes in the exchange rates. Foreign exchange market tries to protect the interest of the persons dealing in the market from any unforeseen changes in exchange rates. So protections in future unforeseen changes is one of the most important functions of the foreign exchange market. Another important points to learn here is the features of foreign exchange market. So we have to identify and what are the main role of the foreign exchange market into the international economy. So basically we have identified there are mainly 6 features which are very common features of foreign exchange markets. Number 1, high liquidity. The foreign exchange market is very much transparency. Number 3, this market is very dynamic market. Number 4, foreign exchange market operates by 24 hours or around the world. And another important features we have seen is the lower trading cost. And very important points or features of the foreign exchange market we have seen also is that the dollar is the most widely traded currency for the foreign exchange market around the world. Now let us discuss about the main features of the foreign exchange market in detail. As we already said that high liquidity is one of the important features of the foreign exchange market. That currency spots trading is the most popular foreign exchange instruments around the world, comprising more than 1/3 of the total activity. This is estimated that spot foreign exchange trading generates about $1.5 trillion per day in the volume, making it the largest, most liquid market in the world. Another features of foreign exchange market is about the market transparency. So the price transparency is also seen very high in the foreign exchange market. You know, one of the biggest advantages of trading foreign exchange online is the ability to trade directly with the market maker. So a reputable forex broker or foreign exchange brokers will provide traders with streaming executable prices. This is the most transparency market in the foreign exchange around the world. Another important features of the foreign exchange market is dynamic market structure. Here, foreign exchange market is the most dynamic one in the world, regardless of which instrument the countries are trading, like be it stock markets, municipal bonds, treasuries, agricultural futures, foreign exchange or any of the countless others are covering into the foreign exchange market. After that, foreign exchange markets features like a 24 hours operations. So each offer 24 hours. Somewhere on the planet, financial centers are opening for the business, and banks and other financial institutions are trading the dollars and other currencies of different countries every hour of the day and night, aside from the possible minor gaps on weekends. Because the foreign exchange market follows the sun around the earth. Moreover, the lower trading cost is also another features of foreign exchange market. Since brokers are not very much entertained in the forex market, the transaction cost, also called as spread, charges by the dealers is reasonably low if compared to other financial markets of the around the world. And last one, the important features of the foreign exchange market is that dollar is the most widely traded currencies. Here you see the dollar is by far the most widely traded currency, and the widespread use of the dollar reflects its substantial international role as investment, reserves, transactions, invoices, interventions, etc. Currency employed by the monetary authorities in market operations to influence their own exchange rate. So, dollar in America, rupees in India, euro currency in European zones, etc. are also widely depending on most of the uh, used dollar and traded with the dollars in exchange rates in international market. So viewers, today we have learned about concepts of foreign exchange market and different functions of foreign exchange markets and various types of foreign exchange market. Thank you for watching. See you on next video.